Florida's condo market isn't falling apart across the board, but in certain cities the numbers have shifted fast. Not because of dramatic headlines, but because of real structural changes. New post-Surfside safety rules, a shrinking insurance market, and HOA fees that have doubled in just 3 years. This isn't about panic, it's about what the data shows. Today, we're looking at 5 Florida cities where owning a condo has become financially difficult for middle-class buyers and retirees, the group these buildings were originally meant to serve. Before we get into the list, let's clear up a common misconception. Some condos are still selling quickly. High-end waterfront units in specific areas are holding up. But in the under $500,000 range, where most Floridians actually buy, the landscape has changed. Federal Reserve Bank of Atlanta data shows that South Florida condos priced under $500,000 had 11 to 12 months of supply in early 2025. A balanced market sits around 9 months. In Broward and Palm Beach, prices fell 6 to 7% year over year in the first quarter of 2025. The root issues aren't speculation, they're structural. After the Surfside collapse in June 2021, the state passed strict condo safety laws requiring milestone inspections at 30 years or 25 years for buildings within 3 miles of the coast, mandatory reserves for repairs, and recertification every 10 years. These laws are necessary, but they've put immediate financial pressure on older buildings and the people who own them. If you're following Florida's housing shifts and want data-focused updates without hype, hit subscribe. We break down real estate conditions across the country, city by city. Number 5, Orlando. Orlando's condo market tells a story many people prefer to ignore. Tourism doesn't shield the market from affordability problems. In 2025, median condo prices across the metro settled around $230,000 to $250,000, down from a pandemic peak of about $310,000. That's close to a 20% drop. But the real challenge is the ongoing cost of ownership. HOA fees typically run $400 to $650 a month, depending on the building. Insurance that cost $1,800 to $2,200 a year in 2020 now runs $3,500 to $5,000 for a standard condo policy. Add property taxes and a 7% mortgage, and monthly housing costs pass $2,000 before utilities. With a median household income of $60,000 to $65,000, that's about 40% of gross income, far above the recommended 30%. Short-term rental owners near International Drive and the tourist corridor are feeling the pressure as well. Inventory jumped 35% from May 2024 to May 2025, which gives buyers leverage but leaves sellers waiting longer. Airbnb occupancy has slipped, and higher supply is pushing nightly rates down. The issue isn't just demand, it's the carrying costs. As one viewer pointed out, in many older buildings, the HOA fee alone is now higher than the mortgage, and with new reserve requirements, that trend isn't reversing. Number 4, Sarasota. Sarasota's upscale Gulf Coast image took a hit when affordability ran into hard math. Units that sold for $500,000 to $600,000 in 2022 are now listed between $400,000 and $450,000. That's about a 25 to 30% drop. Inventory has climbed more than 60% year over year as sellers pour in. Insurance is the biggest driver. Policies that used to cost $3,000 to $4,000 a year now exceed $8,000 to $9,000 for older coastal buildings. Surfside-based regulations forced structural inspections and reserve requirements. Many buildings that delayed maintenance are now issuing special assessments ranging from $20,000 to $50,000 per unit. One viewer summed it up well, explaining that they bought a penthouse in Daytona Beach in 2017 and now pay triple the HOA, insurance, and taxes, over $3,000 a month, even though the unit has been sitting empty for 4 years. That's not an exaggeration. It's a real financial strain. Rental returns have collapsed. Properties that once produced 6 to 7% returns now struggle to reach 3 to 4% after expenses. Airbnb occupancy has dropped as more units hit the market and tourist spending patterns shift. Agents describe open houses where out-of-state investors leave halfway through, saying they'll wait a year. It's not fear. It's a risk evaluation. Why buy when prices might fall more and carrying costs keep rising? Number 3, Cape Coral. Cape Coral was one of the pandemic's breakout markets, offering waterfront lifestyles at prices that seemed within reach. Condo values nearly doubled between 2019 and 2022, peaking at about $340,000. By mid-2025, they slipped to roughly $240,000 to $260,000, a 25 to 30% drop. Here, climate risk and financial reality collide. Insurance for waterfront condos jumped from $3,500 to $4,000 in 2020 to $10,000 to $12,000 in 2025. Several private insurers pulled out of Florida altogether, pushing many homeowners onto Citizens, the state's insurer of last resort. After Hurricane Ian, new flood protection requirements and building repairs led to special assessments of $20,000 to $30,000 per unit in older communities. For retirees on fixed incomes, that's devastating. One commenter described losing their home in Pensacola because the costs became unsustainable. They couldn't sell but couldn't stay, and the stress damaged their health. Inventory in Cape Coral is up more than 90% year over year as owners try to sell before costs go higher. But buyers are scarce. Between HOA fees of $600 to $900, insurance over $10,000 a year, property taxes, and mortgage payments, total monthly costs reach $2,500 to $3,000. Most middle-income households can't absorb that. Number 2, Tampa. Tampa's condo market is absolutely correcting, even though it's not a collapse. Median prices have fallen from about $310,000 at the 2021-2022 peak to roughly $230,000 to $250,000 in 2025, a 20 to 25% decline. Inventory is way up too, with active listings rising 60 to 85% compared to 2021, which shifts the advantage to buyers. Tampa reflects Florida's new reality. Strong job numbers and steady population growth can't counter rising structural costs. Thousands moved to the city during the pandemic, many of them remote workers escaping higher tax states. But as one viewer mentioned, some are now heading back north. HOA fees in waterfront and bayshore buildings have climbed to $500 to $900 a month, up from $350 to $450 just 3 years ago. Insurance for coastal buildings has tripled in some situations, reaching $7,000 to $9,500 a year. With a median household income of around $70,000, a monthly housing expense over $2,400 simply isn't sustainable. Real estate agents say buyer concerns have changed. People used to ask about finishes or floor plans. Now the first questions are about insurance and upcoming assessments. That's a market guided by caution, not enthusiasm. Number 1. Pensacola. Pensacola is facing the hardest correction of all because it was supposed to be the affordable option. Prices peaked around $310,000 in 2022 and have fallen to about $215,000 to $230,000 in 2025, a 28 to 31% drop. For years, many viewed Pensacola as a middle-class sweet spot with military stability, Gulf Coast beauty, a smaller city feel, and lower costs than South Florida. That changed once structural costs surged. HOA fees rose from $350 to $400 to $700 to $850 a month. Insurance jumped from $2,500 to $3,000 to $7,000 to $9,000 a year. Special assessments of $20,000 to $40,000 hit older buildings that needed recertification. Meanwhile, the median household income sits around $60,000. Monthly ownership costs of $2,200 to $2,500 simply don't work when the typical household earns about $5,000 a month before taxes. Inventory is up 90% from last year as owners rush to sell before another assessment arrives. But buyers have stepped back. Airbnb investors who once crowded the panhandle pulled out. Occupancy dropped below 50%. Nightly rates fell around 20%, and long-term rentals don't cover expenses. This isn't about investors taking the loss. It's about teachers, nurses, service members, and retirees caught in homes they can't afford anymore. One viewer summed it up. Florida's condo decline makes sense, given rising insurance, special assessments, tighter reserve requirements, and more inventory. Will this correction make buying safer or drive buyers away? The honest answer is both. Prices are adjusting, but demand will stay weak until carrying costs settle down. Florida's condo market isn't collapsing across the state, but the under $500,000 segment, where most residents buy, is under serious pressure. Post-Surfside rules, shrinking insurance options, and rising HOA fees are reshaping the market. Orlando, Tampa, Sarasota, Cape Coral, and Pensacola show what happens when total housing costs exceed what typical households can support. This isn't a drama. It's the reality thousands of owners are dealing with as their equity falls and monthly costs climb. The market will stabilize, but not at 2022 prices. The new normal will bring stricter lending standards, lower valuations, and a tough adjustment period for anyone who bought at the peak. If you're thinking about buying a Florida condo, focus on 3 things. Confirm insurance availability and pricing, check the building's reserve status, and calculate full monthly costs instead of fixating on the purchase price. Solid information is the best protection in a fast-changing market.